Well, more now on GE's mixed results this morning. Again, beating the street estimate on the bottom line, but missing on that revenue side. I want to bring in Charles Ortel again. Charles has been tracking GE for years. He's the managing director of Newport Value Investors. And anyone who's been following your work, Charles, knows that you are a bear on GE. And I don't think that these results really change your mind, right?
Not at all. I mean, it would be tough to pick a company that isn't already owned by the U.S. government that has gotten more support than GE. And here what you see in GE.
You're talking about GE Capital.
Well, just in general. I mean, GE, there's a story out that GE got a tremendous amount of stimulus money, the GE Capital deal, the FDIC deal, the what I would say lenient treatment on behalf of the SEC. But if you look at these recent numbers.
Why would you say that?
Well, because, you know, there's an ongoing investigation into the equity raise period in 2008. We haven't heard anything yet on that. It would seem to me to be a crystal clear case where GE was saying one thing to the government asking for aid and another thing to investors and Warren Buffett. So, but just staying on the second quarter results, here with all the support, with, you know, low interest rates, with you know, lenient policy, their top line revenues, if you look at the industrial side, are down. In the energy sector, they're down. I mean, this is very, very surprising. And
but why is that surprising, given what we've seen so far with durable goods, what we've seen with, you know, demand from the corporate sector? I mean, why would that be surprising, though?
Well, because in our work around the world in many different industries, there's a very clear argument that if you're number one in anything, the quality of your business is going to be demonstrably better than number 2, 3, 10, et cetera. And, you know, GE's hand in some of its core businesses is very strong. It should be doing quite well. Instead, their top line revenues are down. They're getting their EPS results by cutting costs, which is, of course, a good thing, but you can only cut costs so much. So in our view, when you look at GE's results, you're seeing very clearly why the government's policies do not work. Here we have a multinational company that can employ people around the world. They can lower their costs by far.
But I'm not sure that people are looking at GE as a play on government. You know, I don't think that that's what, you know, I haven't heard anybody ever say that.
No, I think people look at GE as an example because it's so big of what's going to happen with the
contract.
What's going to happen with the global economy. Because they're so diverse in so many different places, there is an argument that's developed over the years that GE is a good proxy for global economic activity.
That is true,
right.
Yes.
And here we're seeing that, you know, accommodative policies around the world have not resulted in important top line growth. When we invest in companies, there is no such thing as a growth story with declining revenues. When you're declining your revenues, you're liquidating. And that is not an argument to be paying a premium price for business. The reason we have problems with GE is we think structurally it does not make sense to be as diversified as they are.
Right. Structurally, you've argued for a spin-off of GE Capital, right?
Well,
is that?
We just don't believe there's any human on the planet, Warren Buffett included, who can look across the spectrum of so many complex businesses, take on all comers, and be as effective as a highly focused manager will be in a pure play. So, you know, if you look at GE and their finance side, we certainly do not think they're best of breed. We don't like their capital structure. We don't like their mix of businesses. And we don't like their performance. Okay,
so then, look, Imel's got, I think, like $25 billion, you know, he's got about $25 billion or so to work with then. So in your view, what would he need to do then to refocus, in your view, to refocus GE with that capital then?
Well, I think the bigger question is, why does this management team still have power? I mean, if you were...
But the capital that they have, though, I mean, you know, okay, fine. They need to manage properly then, is your view. Then if they've got all that capital, where should they put it, though?
I think they need to pay down debt. I mean, they have too much debt, not enough equity. They need to focus the business. They need to stay only in companies where they really are strong.
Like?
Well, I would say energy is one area where they, in theory, are strong. In certain industrial areas, in theory, they're strong. But on the finance side, I think they're an also-ran. And, you know, I think you look at the quality of their disclosures today. Here we are a day after J.P. Morgan's very detailed, incisive disclosures. You get 9 pages of very approximate data.
And you're saying there's not enough transparency. Yeah, well, you know, we've heard that argument as well before on GE Capital.